A very good morning, guys. For 4 episodes now, I have been telling you one thing. This market pricing calm far too cheaply into a single day. And well, this calm has gone out completely. The fear gauge has climbed 3 sessions in a row, and the closing bell has misfired 2 days running. And today, the waiting ends. At 10 o'clock, this morning, the Reserve Bank decides on rates. The pros who quietly bought cheap insurance last week are sitting pretty. The crowd who sold it to them is sweating. So, this is not a normal morning. Today is the event the whole week has been leaning toward, and here is the plan into it. Plus, the one thing that happens to every option price the second the governor stops speaking. This is the Tanmay Edge. You are listening to episode 96. I am Tanmay Gurtogoti. Let's go. So, let me close the loop, guys, first because the story of this week is nearly complete. Last Monday, the fear gauge sat at 11.76. That is the VIX, a 3-month low, and the option volatility was crushed under 18, under 8. 2 full days, a rate decision. I said that was too cheap, and then the market was pricing this event as a non-event, and the professional desks were quietly buying insurance on both sides while it was on sale. Watch what happened since. The fear gauge has climbed to 12.19. The internal volatility has gone up to almost 14%, and the weekly straddle price of a bet on the movement has roughly doubled. The wall expansion I flagged is here. The pros were right and they were early. Today, the reason they were buying finally arrives. But before the levels, the housekeeping, because it decides how you read your number on your screen. The new cash has now misfired 2 days in a row, and it is a complete mess. Monday it printed the Nifty 188 points higher, and yesterday on weekly expiry it did it again, spiking the settlement about 150 points above the market actually traded into the close. The screen says Nifty settled at 24,614. The real level from the futures and the Sensex was close to 24,462 when it stopped, and after that, here is why it stung yesterday the biggest. Yesterday was expiry. Options settle on the close price, and auctions dragged the settlement above 24,500 and 600 as well, where the market was quietly pinning into. So traders who correctly sold 24,500 straddle got a run at the bell by the print, not by the market. I warned you yesterday to watch the 330 auction. It misfired exactly as feared. Grade everything today of the real level near 24,500, not the 24,615 on the screen. On the real tape, yesterday was quite a down day, not the sharp one headline suggested. The real Nifty eased about 1/3%, and the Sensex with a normal close fell just 0.27%. Under it, the heavyweights did the damage. Reliance down over 1% and HDFC Bank nearly 1.5%. While the broader market was weak, 35 stocks on Nifty flipped lower, and 15 stocks were higher. A tired tape drifting, waiting for the governor, and over and above that, the closing auction session. Nothing about yesterday changed the setup. It just wound the spring tighter and tighter, and the positioning tells you who is already ready for today and the coming week as well. The foreign funds walked in as protected long, short the index futures, but holding a huge book of nearly 486,000 long puts. Insurance has paid them up, and they bought another 2,446 crore of stock in the cash market. So they are long the market with the seatbelt on. The domestic funds DIS for once sold 936 crore in the cash, booking a little into the strength. And the pros, the desks that were long volatility last week, have now taken that bet off. They turned net short across futures, calls and puts because their cheap options already did their job, and the fear gauge has climbed. They bought low and they are now trimming into the event and flipping into a short volatility trade. That is the tell of the week. The smart money owned the move before it was priced, and now it is priced, they are lighting it up. Now the overnight, guys, and it hunts up strong tailwind. Wall Street has ripped nicely. The S&P is up 1.8% and the Nasdaq is up 2.5%, and Asia is ripping up this morning. Japan is up by more than 3%, Korea is up by 4%. The American 10-year yield eased at 4.61, and the gift for an oil importer, that is India, crude stayed down near $79, its lowest in weeks. A straight tailwind for inflation for rupee and the RBI's comfort on very morning it decides. Our own futures point to a gap up open near 24,730 to 750. So clearing yesterday's 24,600 resistance on a global lift, with the decision 2.5 hours later. But hold that thought, because a gap up that opens above the wall before the governor has even spoken is not a breakout you can trust. So the lesson for the day is this, guys, and it is exact mirror of one I gave you last week. Last Monday I said buy cheap insurance, own volatility into the event. Today I am going to say the opposite, and here is why. The event premium that was cheap last week is now fully priced in. The straddle has doubled. So if you walk in at 9:15 this morning and buy an option betting on a big reaction to RBI, you're paying a lot event premium for a decision that has 60 out of the 72 economists saying it is a boring hold and unchanged event that is going to happen. And the moment the governor confirms the hold, that premium evaporates instantly, because the uncertainty it was insuring against is gone. That is IV crush or volatility crush. Volatility does not fall gently after a known event, it collapses. So the edge today is not buy protection. Now it is the expensive part. The edge was owning it last week when it was cheap. If anything, the trader after 10 o'clock on a confirmed hold is to be a seller of that inflated premium, not the buyer. Do not chase volatility into an event everyone sees coming. Sell the calm back to the crowd and the number prints. So the plan is clear, guys, and it is in two halves. Before 10 o'clock, respect that market is holding a pattern. A gap up clears the 24,600 resistance on the global tailwind, but do not trust the breakout before the governor speaks. And the conviction widespread and a level that opened on foreign flows, not our own conviction. The level on the fresh weekly chain, max pain sits at 24,500, right at the level the biggest call wall is 24,600, the one we keep bumping up. And the put floor, the support is stacked at 24,000, 24,200 and 24,400. After 10 o'clock, two roads. Road 1, the base case, and that is what is I am expecting a hold as expected. The volatility crushes a bit and the market likely settles into a range and lets the straddle seller gets paid. Look at the drift back towards that 24,550 to 600 zone. So 600 is where it should settle out. Road 2, the tail is hawkish hold. The bank keeps the rate but sounds worried about inflation, which is live because June inflation ran at 4.38%. That is the one outcome nobody hedged, and it is exactly what the foreign funds own those 4,86,000 puts. If that lands, the downside opens up and 24,500 can be broken. And then the third, and trade the reaction, not the anticipation, guys. And the third one is we see a clear breakout and the market sustains about 24,600. If that happens, 25,200 is coming fast, guys, and keep a watch on that as well. So scorecard on yesterday, guys, I said watch 330 close. The auction could misfire again and distort the expiry on the settlement of 24,500 and 24,600 strike. It did almost to the script, and the real market pinned right at that 24,600 strike I flagged. Call it 4.5. Full scorecard is available on the website rupeecase.com. That's the edge for today, guys. The whole week built to this number at 10 o'clock. The cheap insurance is now expensive. The pros have owned it and are now cashing it out by selling options. And the only real risk left is the surprise the crowd still is not paying for. So do not buy the fear gauge today. Sell it back after the print and grade every level of the real market, not the auction fiction. And do not trade into the close, guys. The market is not stable. The auction book is extremely thin. The cash is not settled yet. So keep a closing at 315. Do not trade after 315. This was the Tanmay. If you found value in this, guys, please share it with one trader friend who needs it right now. Subscribe on Apple Podcasts and Spotify and listen it live where it streams first, and give it a rating and a review if you want to add something to the podcast. Have a happy Wednesday, guys.